Welcome back to the channel. In today's video, we are going to break down the latest Dogecoin market movement in a simple, clear, and easy to understand way, especially for those who are following crypto but don't have charts or technical tools in front of them. Dogecoin has once again grabbed attention across the market after showing a short-term price increase and a surprising spike in trading activity. We will go through what is really happening behind this move, why traders are suddenly becoming more active, what big investors might be doing in the background, and what key price levels could decide Dogecoin's next big direction. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. To start with the latest update, Dogecoin has increased by around 2% in the last 24 hours and is currently trading near the $0.086 level. This may look like a small move on the surface, but in the crypto world, especially for meme coins like Doge, these short bursts of momentum often attract a lot of speculation and trading interest. More importantly, this recent upward push did not happen randomly. It came after Doge managed to climb from roughly $0.077 to $0.086 over a short period between June 6th and June 8th, which shows that buyers have been slowly stepping in and defending key levels instead of allowing a deeper drop. One of the most important points in this entire move is the strong support zone around $0.081. This level is not new. In fact, it has been acting as a major defensive zone since early 2024. Every time the price has come down to this area, buyers have stepped in and pushed it back up. In total, Dogecoin has bounced from the same region multiple times over the past months, showing that this is not just a temporary level, but a long-standing foundation where demand has repeatedly appeared. The interesting part is that this level is also connected to a broader technical structure on the weekly chart, forming the base of a descending triangle pattern. Normally, this type of pattern is seen as a warning sign of a possible breakdown. However, in this case, Dogecoin has continued to hold the support instead of breaking it, which has prevented a much deeper potential decline that could have sent the price significantly lower. Now, when we look at trading activity, things become even more interesting. Recent exchange data shows that Dogecoin trading volume has surged strongly, even surpassing XRP on the OKX exchange. The Doge to USDT trading pair recorded around $38 million in volume, while XRP to USDT stayed near $30 million during the same period. This means Dogecoin is not just moving in price, but also attracting more active participation from traders compared to some of the larger and more established cryptocurrencies. Even more notable is that Doge accounted for about 5% of total trading volume on that exchange, while XRP held a much smaller share. In ranking terms, Doge was positioned inside the top 10 most traded pairs, even ahead of several trending altcoins. This kind of volume shift usually signals rising attention, and in crypto markets, rising attention often comes before larger price moves. A big reason behind this sudden increase in interest appears to be expectations building around upcoming market events. There is growing speculation linked to a major SpaceX-related development expected around June 12th, which some traders believe could indirectly impact sentiment around meme coins like Dogecoin. Whether or not that connection plays out in reality, the key point is that traders often position themselves in advance of major news events, and that is exactly what the data is showing right now. Increased volume, rising participation, and higher speculative positioning all suggest that the market is preparing for possible volatility. On top of this, whale activity is also playing an important role. Large holders, often referred to as whales, have reportedly accumulated over 200 million Doge tokens in a short period between June 4 and June 8th. When large investors start accumulating at support zones, it often signals that they are either preparing for a short-term price move or building long-term positions at what they believe are discounted levels. This kind of accumulation typically reduces available supply in the market, which can increase upward pressure if demand continues to grow. However, despite this bullish activity in volume and accumulation, the technical indicators still show some caution. The Relative Strength Index, commonly known as RSI, is currently sitting around the mid-30 level. This suggests that momentum has been weak overall, even though buyers are slowly stepping in. In simple terms, it means Dogecoin is not in a strong bullish trend yet, but it is also not in extreme selling territory. Instead, it is in a neutral to weak zone where small shifts in demand can significantly influence the next direction. Looking at the downside risk, if Dogecoin were to lose the important $0.081 support level, the next major area of concern would be closer to 6 cents. A breakdown below this zone could open the door to a much deeper correction. However, as long as this support continues to hold, that bearish scenario remains inactive. In fact, the repeated defense of this level over many months has already invalidated several stronger bearish expectations that were previously forming in the market. On the upside, Dogecoin now faces its first major resistance near the 10-cent psychological level. This is a very important zone because it is where many traders tend to take profits or place short positions. Interestingly, data shows that there is a large concentration of short positions around this area. In fact, nearly $296 million worth of short positions could face liquidation if Doge manages to reach 10 cents. This creates a situation where, if the price starts moving upward quickly, it could trigger a cascade of forced buybacks, potentially accelerating the move even further. At the same time, long liquidations have been relatively smaller and more stable, which suggests that the market is currently slightly more tilted towards short sellers. When more traders are betting against the price, and volume starts increasing in the opposite direction, it often increases the chances of a short squeeze. This is why the 10-cent level is being watched very closely by traders across the market. If Dogecoin manages to break above 10 cents and hold that level, the next major resistance would be around 11 cents. A strong move above that zone would not only invalidate the current bearish triangle structure, but could also shift midterm sentiment back toward a more bullish outlook. That would be a key turning point, as it would signal that Dogecoin has not only defended its long-term support, but has also broken through its early resistance zones. To summarize everything, Dogecoin is currently in a very sensitive but interesting phase. On one side, we have strong support at $0.081 that has been holding for months, rising trading volumes, whale accumulation, and increasing speculative interest ahead of a potential market event. On the other side, we still have weak momentum indicators and major resistance zones ahead that need to be broken before any strong bullish trend can fully develop. Right now, the market is balanced between uncertainty and opportunity, and the next major move will likely depend on whether buyers can continue defending support while pushing through the 10-cent resistance level. Thanks for watching. If you enjoyed this video, make sure to like, subscribe, and turn on notifications so you never miss the next update. See you in the next one.